Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, December 15th, 2011. There's a lot going on, as there is every day, as we get set for this quadruple witching options expiration, which is set to expire tomorrow. But let's take a look at the charts today. You're going to see the futures are getting a little bit of a bid. They are trading higher by about 10 points right now to 1222.50. Pretty good little pop this morning. Obviously, if the markets are trading higher, it tells us one thing: the U.S. dollar index must be trading lower. And sure enough, that is the case today. You can see the dollar finally getting a little bit of a pullback from an extended move, but the dollar has really surged higher over the past 3 days, and that has caused a 3 day sell off in this market. So basically, you could skip the European news, skip all the news out of Asia, just watch the dollar. Dollar comes down, the markets will inflate and trade higher. The dollar moves higher, the markets will deflate and trade lower. It's just that cut and dry at this time. Until that relationship changes, you just watch the dollar really for your guide to tell you if these markets are going to trade higher or lower. The dollar essentially is the driving force behind every market move at this time. Alrighty, let's get into some other things here since we do have higher futures. Let's talk about GLD quickly. Gold yesterday got really rattled. Big sell off, closed below the 200 moving average on the daily chart. That's something that does not happen very often. In fact, I'm not even sure when the last time gold or the GLD sold off below the 200 moving average on a daily chart. It is rebounding a little bit today, signaling a little bit of inflation. We'll see how that goes. Right now, traders should still be a little bit concerned about gold because it did technically break down and is below all of the major moving averages, meaning the 50, the 200, the 20, and any others that you look at. So it is technically a little bit on the broken side, but nonetheless, due for a short-term bounce, I expect here, and we'll see if that does occur. But gold right now, the GLD, I should say, is trading at 154.46. Yesterday closed at 152.89, so getting a decent little pop back up. Let's take a look at SLV this morning, trading at $28.20. SLV closed at $28.07. Not a great reaction for the SLV, but nonetheless, that has also broken down pretty sharply. There is some support levels coming in for the SLV near term. I guess you do have a little bit of support around 27.40, but you got to be careful on this. If the markets start to deflate again, gold and silver can go lower. So just be aware of that, because these are gold and silver, the precious metals, are the greatest barometers of inflation and deflation. And once the Federal Reserve did not announce or hint towards any QE3, it really took the steam out of all the precious metals. Okay, let's take a look at a few other things here. One thing I would like to look at this morning um, is oil, and you'll notice that oil also had a big fall yesterday, a real big tumble. Today it's snapping back very mildly, but let's take a look at the USO. Yesterday oil was down over $2. Today the USO is trading up a little bit off the lows. Yesterday closed at $36.66. Today trading at $36.96. Not that big a deal. So we'll watch that closely. But oil's getting a little bit of a rebound. Again, $100 oil is really unsustainable for the economy at this time. Anytime we've had $100 oil or even $90 oil, it's really only a few more months before the market goes into a major corrective mode. So again, we'll have to watch that closely. It looks like we just had PPI and jobless claims released. Markets are getting a little bit more of a bid. We'll see if they can sustain themselves up here, but we're getting just a little bit of a pop. We've already been up this morning, so I'm not sure how much the market's going to move higher from here. But jobless claims coming in at 366,000. That's probably the best number that we've seen in quite a while. But not for nothing, we should see that kind of number during the Christmas holidays. There's a lot of hiring going on, temporary help. So you have to think that during the Christmas holidays, you should get a much better number. Looks like November PPI came in at 0.3%. So that's also helping the markets as well at the moment. But so good day overall for the markets, good little bounce, and we'll just see how it trades from here. But markets are starting to move up after some economic data was just released. Now I have some stocks in the news today. Novelis stock is being acquired by Lam Research. Do not do anything with it. There's nothing to do, nothing long, nothing short. It's a takeover. It's over. If you own Novelis, congratulations. If you don't, not a big deal. Leave it alone. There's nothing to do here. Um, Lamb Research is the company acquiring Novellus. They're actually, holding up pretty well today. I don't see any problems there either. Okay, so Novellus is a takeover candidate. Honeywell, I saw that was in the news this morning. Sold off, has now reversed higher. So Honeywell's holding steady. If this stock does fall, watch the $49 level. There's very good support at $49 for Honeywell if it does get down there. Could be a short-term bounce play. So keep that on your radar. Now FedEx. FedEx had, I believe, earnings today. Stock is trading up a little bit. Nice little move to around the 80.50 level. Again, big level for FedEx to get through would be probably 82 to $83. That's going to be a pretty good amount of resistance. We'll see if the stock could get through there. But nice little pop for FedEx. In sympathy to FedEx, you may want to watch UPS. UPS could be due for a little bit of a pop. You can see that's actually trading higher as well. So watch those on your radar. Deckers Outdoors. This is the maker of the UGG boots. Stock is getting hit this morning. Pretty sharp decline. Looks like the 200 moving average on the daily chart has been breached. That was at $93. This stock has a big gap down today. Just looking here, and I see a pretty good support level around the 85 area. So keep that on your charts. Maybe it's 85.75, 85 area, right around there is very, very good short-term support. So watch a little bit lower. If it gets down to this 85 area, this is a pretty good little support level. May give you a short-term bounce. I believe this is earnings, so be a little bit careful there, but I think that's a good bounce level. Let me take a look at this CEDC. This stock is having a good pop today. This is Central European Distribution Corp, maker of wine and spirits. Nice little pop today. Not really sure how much more it has left in the tank, but it's a good move. I think the $6, maybe $6.25 area would be max upside, so do not look for any more than that out of this thing. But it's a nice little pop. It looks like a pretty strong gap, at least initially at the start. So be careful. If the market's weak, then you're going to want to be a little bit cautious. But I really don't think it gets much higher than maybe $6.10, $6.15. But a good little move there. Here's another stock that was taken over today. So you're starting to see more and more buyouts. This stock right here, SONO, was taken out by Fujifilm. I believe for close to $1 billion. I'm not sure. I really just saw the headline. But there's nothing to do with this stock. You don't want anything to do with it. See how these flat candles are just going sideways? That means there's no trade there. You cannot, short it. You can't buy it. Just leave it alone. It's done. The stock is over. Soon it'll be acquired and will no longer trade under the symbol. So that's how you have to look at this one. It's another takeover there at the moment. Now, something else to go over real quick, and then we'll end this broadcast. The Asian markets were again weak last night. Now, if the U.S. markets by some chance roll over today, watch the Chinese ADRs for weakness again. Now, it doesn't look like the markets are going to be weak at the start of the day, but anything can happen, so you want to be a little bit careful. But what I'm going to tell you is that the Shanghai was down 2% last night. So finally, you're starting to get that real distribution in the Shanghai index. And you got to watch those Asian ADRs or those Chinese ADRs at the moment. Asia as a whole was down big last night. You had the Nikkei down 1.6%. Shanghai was down 2.14%. The Hang Seng down about 1.8%. The Indian Sensex was only down 0.3%, and Australia was down 1.2%. But nonetheless, they were all down. All the Asian markets were down last night, so you got to be a little bit careful there. The one thing you want to watch for, though, is if the U.S. markets turn down today. If by some chance they do, and there's no guarantees that they won't, then you're going to watch for weakness in those Chinese ADRs, okay? That's what I just want to point that out. But right now, they've all hit pretty good support levels, so they may hold up pretty well as long as the U.S. markets here hold up today. If they don't, then get ready. You're going to see more downside coming into those names. Alrighty, everybody. With that said, thank you very much for this morning, and we'll see you all on the charts. Take care, everybody. See you tomorrow morning.